Tech Talk Tuesday. I'm your host, Karla, and with me today is my fellow co-host and CMT, David Blake. It's Monday, February 26, 2024, and we have some activity to talk about that happened in the stock market last week, along with some interesting things to look out for going forward. We do it from a technical perspective. David, I hope that you had a great weekend. How are you doing today?
I'm doing well, thank you.
Great. Well, let's get started by taking a look at last week's market activity.
All right. Well, last week we started out a little slow. The NASDAQ was on a 3-day losing streak until we got the blowout earnings from Nvidia, which sent the major averages sharply higher and for the week. That actually ended up being the 15th out of 17 weeks that we've seen the major averages tick higher. And just to put that into perspective, if we finish higher this week, that'll make, of course, 16 out of 18. And that would tie the record for the S&P 500, which was last set in 1971, and also ties the longest streak since the S&P 500 was created. So we are on kind of a record run with this, since the October bottom. And of course, a lot of that is due to hopes for rate cuts, that type of thing, as the Fed pivots. But just that puts a little bit more of a perspective that this is a historic run that we're on currently. But anyway, as I said, we started out a little bit slow last week. We had investors rotating out of big cap technology shares early in the week. We also had a little bit of an uptick in yields, which weighs on growth in technology stocks and also small cap stocks. Yields move a little bit higher. But then when Nvidia came out with their earnings, and they jumped up over $800 a share for the thing. I think it may be the biggest market cap in the market. I'm not sure. I think it's up around $2 or $3 trillion. And then we had that erased the losses from early in the week. And then on Wednesday, we had the FOMC meeting minutes came out. And that actually did confirm that the Fed was in no hurry to cut rates. Traders, the active traders that want drinking to punch, they're looking for a March rate hike. But that's we're really not going to get that unless we really see some horrible economic data. And I don't expect to see that here the next couple of weeks. So we're looking right now at about a 60% chance of a rate cut in June, which is, what the market's pricing in at this stage. So we had a couple comments came out from different Fed officials last week, and they said we wanted to appease some of the investors, and that was they commented they are ready to cut rates when the data gives a signal. In other words, when they see the data weaken to the point where they think they can step in and sidetrack a recession, they want to do it, but they're just quite not ready yet. They haven't seen the weakness there, and some analysts are saying, why cut when the economy is pushing it along like it is right now? Everything seems to be fine. Although GDP came in here just moments ago, and it was actually, I'm sorry, durable goods came in just a few minutes ago. They were down 6.1% for the month. That's below expectations of -5%, something to consider. And then also that's ex transportation. Durable goods orders were down only 0.3%. So that was pretty good. We had a lot of airline orders, I guess, that didn't go through, that kind of set that off. So after that, we had the yield of the 10-year Treasury. Once the Fed FOMC meetings came out, it ticked as high as 4.35, but it did settle down to 4.25 by Friday. And then once it started to pull back a little bit with the video and all, we had the rally on Thursday sent the Dow Jones, the S&P 500, the NASDAQ 100, the NYSE, and the Philadelphia Semiconductor all to new highs. So it was a good week. The NASDAQ briefly made a new high on Thursday and also on Friday, but late on Friday, it rolled over a little bit and it wasn't able to close above at a new high. So that's something that we're probably hopefully trying to get maybe here in the next week. So it kind of depends on Thursday's core PCE number. We'll talk about that a little bit later. As far as the gains last week, they were across the board, which is good to see. Led by consumer staples. That was partially due to a big jump in Walmart stock, and they also, I believe it's this Friday, Walmart does their 3-for-1 split. And we also had an announcement last week that Amazon went into the Dow Jones starting yesterday, gave Walgreens the boot. And while we're talking about reshuffling of indexes, We also saw Uber Technologies go into the Dow Jones Transportation Index with JetBlue. So that's a few changes that were made on there. But we also had, besides the consumer staples, materials, financial, industrial, healthcare, and technology were all up more than 1.25%. So it was a good week for being more broad based in what we've seen. Energy was the weakest market group. Oil prices continue to stay in that trading range, but they ended their 3-week sprint higher, seemed to get up to around this $80 mark, and they seem to pull back a little bit. I think you'll probably see that for a little while unless we see more trouble in the Mideast. But so far, kind of has been staying in this trading range, and we'll see how that goes for a little bit. But anyway, this week coming up, investors will be focused on Thursday's PCE report. That's the Fed's preferred inflation gauge, and what we're going to be looking for is signs that the January with the CPI and the PPI is just basically a one-off, and that would indicating that inflation is still moving lower. But if we do get a higher print on the core PCE, we may see rates tick a little bit higher. We could see the market have a little bit of a pullback off of that. So we'll have to see what happens there. Technical condition of the market remains positive. Along the major trend is bullish, and we're pushing to new highs. Last week we had a little bit of sideways trading yesterday to start the week. The technical indicators remain positive. MACD, it's a short-term trend gauge, is in bullish territory. Momentum is positive and rising. We're not overbought here because we've been kind of going a little bit sideways here Friday and yesterday, so that's good. But we saw some negative divergence in some of the charts, especially on the weekly charts. However, they're not really signaling anything more than some overdue consolidation. After this big run that we've had over the last 17 weeks. So I think your people are probably still buying the dips. I would at this stage, I would probably wait until Thursday's numbers to come out to see how big of a pullback we can get. Positive things with the indexes. We did see the transports fell below the 50-day moving average. They were able to regain that support level. Russell 2000 continues to bounce off the 50-day moving average. It's probably bounced off of that probably 8 or 9 times over the last couple of weeks. So that's a positive. We'd like to see the small caps, actually kind of lead the market higher and lower. And we have seen some positive momentum lately in the small caps, which is a positive. Now, one of the things that I mentioned, there are, if you look at the charts, a lot of gaps in several of the indexes. And a lot of times you will see these gaps filled over the short term, just to the point where you had too many buy orders or too many sell orders come in. And a lot of times the market will go back and fill those gaps. So that could be something we could be looking at. If that's the case, say the first area of support that we would want to watch would be last Wednesday's low. I don't have that right in front of me, but if we do see that, you may want to test, keep an eye on that. And then after that, we'd see the 38.5 for the Dow Jones as the next level of support, 49.50 for the S&P 500, and 15.6 for the NASDAQ. When I mentioned I saw the negative divergence in the weekly charts, and you can read it in the market letter, I noticed that the 14-week RSI, it was up in the mid-70s on the Dow Jones and S&P 500, and that's the most overbought on the weekly charts. Those indexes have been since January of 2021. So because of that, I think you're probably overdue for some consolidation in these indexes. Of course, I just mentioned that we're on a record run off of the October lows here. And of course, that was some consolidation. Certainly is something that we need. These things don't go up forever. And when you get that consolidation or a little bit of a pullback back in filling, it's a positive for the market in general. So, like I said, what we'll look at here this weekend is the core PCE. What we don't want to see economic data getting too soft. I think anything that suggests that we're not going to see a non-landing or a soft landing ahead would probably be trouble for the market. We'll see how that goes. But at this stage, there's nothing out there that says you need to get out of the market and and head for the hills or anything like that. Underlying breadth was mixed last week. That still continues to be a little bit iffy. The NYSE advanced decline line was up a little bit, but the NASDAQ AD line, despite the finishing higher, was actually lower. And even on Thursday's big 200 on Thursday, was something like a 200-point move in the NASDAQ. It still only had 350 more units on the upside than downside. And normally you want to see something like that. You'd like to see like an 80% participation day in volume. Part of that was just some of the big cap tech stocks that pushed the NASDAQ that high. So it's still a little iffy on the participation of the underlying breadth, but we'll take what we can get. Also, part of the sentiment goes, we're still a little bit overly bullish, although we did see a little bit of a pullback. And part of that was in the hedge funds. They up around 94-95% invested if they had exposure to equities here the last couple of weeks. That came down to 75% last week. So they're taking a little bit of money off the table. I think that's part of that was what you saw when I mentioned earlier that we saw some of the big cap technology stocks coming off way back on Monday and Tuesday and Wednesday of last week. So yesterday was another day where you saw some of the big caps underperform. And it looks to me like what you're seeing is kind of Microsofts and the Apples and probably Nvidia in here at some point. Is when they're selling the rips and maybe buying the dips. In other words, if you get a 4 or 5 point move and say Microsoft, it looks like the hedge funds are selling that rip, and then if we get a pullback over the next couple of days, they'll go in and buy the dip if it where it finds support. So at this stage, I think for the rest of the week, we probably probably trade a little bit sideways. Hopefully continuing to consolidate. You want to keep an eye on some of the economic data here over the next week or two to make sure that the economy is staying strong. Bad news is probably going to be bad news moving forward here soon, because at this stage, market participants are still looking for a soft landing or non-landing. If we start to see the economic data start to roll over where it's getting negative, then all of a sudden that may revive thoughts that we may be going into recession, and that would be bad for the market. But this hang out till Thursday and see what happens with the PCE, and probably looking for some consolidation, some sideways action going into that.
Okay. So just one question for you, David. Do you think January was a one-off on an uptick in inflation?
I don't know. That's what we're going to find out on Thursday. At this stage, the last around Christmas time, that there are some the data does get a little bit fudged with because of the holidays and that kind of stuff. I think it's unrealistic to think that this battle on inflation, you're just going to tick down every 2-3 months, and that's the Fed's going to navigate this perfect little scenario where we had the spike up in inflation. Now we're going to bring it right down. That's never really happened before, and you have to expect bumps in the road on something like that. It's you're trying to take the whole economy and just to have it come in for the landing by just switching the interest rates. And I think it's unrealistic to think that we're not going to have these bumps along the road. That's why I would expect that you're going to see. It wouldn't surprise me at all to see the core CPE tick a little bit higher and the market have a little bit of a fit there, and possibly drop down a little bit. We haven't really had any big drops this year much. So I would, it's not going to surprise me. I think that we're overdue for some kind of pullback, not a 7 to 10% thing, but I do think that we could at least pull back to those support numbers that I gave you earlier. Below that, there's a second layer of support, which I'll probably mention in Friday's market letter, but they're still not high. I mean, when I talk about we could see a problem with a pullback, I'm talking maybe 5%, maybe the most, which would not be terribly rough for the market. But you have to expect some bumps in the road at this stage, because we've had really nice downdraft with inflation. But again, you're going to have some bumps, and I would not going to be surprised if we see the PCE this week come in just a tad hot.
Okay, well, thank you for all the helpful information, David. Is there anything else that you'd like to add going into this week?
No, I would like I said, I would sit on the sidelines this week. Again, you have your favorite stocks out there that you may want to look at. I know a lot this week is some of the gains we saw, even though yesterday were modestly lower, a lot of the AI stocks were higher. We're getting a big move in Bitcoin. It actually yesterday was up about, I don't know, 5-6%, and we saw Bitcoin get to its highest level since November of 21, and we're up again today. It broke out. It broke above that 50,000 level on yesterday. Today, I think we're up another 5% pre-open. So keep an eye on that. That's generally when you see that going up. But I don't know how that reacts to the inflation. But in the past, when we've had a big run up and when in Bitcoin, you've seen more of the growth stocks start to get a little bit of a bid too. Bitcoin's going strong as more speculation comes into the market, and that helps the growth stock. So that's something to kind of keep an eye on here over the next couple of days. But as far as the broader market goes, look for sideways action until we see that PCE and core PCE on Thursday, and we'll see if it does come in a little hot. Just to anticipate that we're probably going to trade lower off of that.
All right, well, that wraps up this week's Tech Talk Tuesday. Thank you again for all of our listeners, and be sure to subscribe so that you don't miss any of our future shows. Thank you for listening, and we will catch you all next week.